On the back of worries of slowing economic growth, damaging trade wars and Brexit. Speaking to SABC News in Davos, President Cyril Ramaphosa said government will continue with its endeavour to create policies that will treat all citizens equally.
The president says South Africa will soon be embarking on a massive drive to ensure that young people are trained in digital skills, which will lead to more jobs. Ramaphosa says the country has about 14 million young people in primary schools as well as in colleges and universities. He says the spread of digital education will ensure better training. Also this week, Stats SA data shows that consumer inflation slowed down to 4.5% in December from 5.2% in November. The biggest driver of the annual deceleration came from the transport category on the back of lower fuel prices. Inflation is expected to remain contained at about 4.8% average this year.
This is good news for consumers. It means that interest rates are unlikely to rise in the first half of this year at least. In the Reserve Bank, following their meeting last week, they intimated their quarterly projection model suggested that there will only be another 0.25% hike in interest rates between now and the end of next year. So that is good news for consumers who are heavily indebted. For those who are relying on pensions, it means that they're not going to get as much as they would have if interest rates rose.
The BER consumer confidence in the fourth quarter remained unchanged at 7 compared to the third quarter. Analysts say most consumers are fairly optimistic about the outlook for the economy and their own household finances. The November business cycle indicator is down slightly. Reserve Bank data shows leading business cycle indicator came out at 105.5 compared to 105.8 in October, down minus 0.3 month on month. Next week, Stats SA is expected to release the producer price index for December. Gloria Safako Musi, SABC News, Johannesburg.
It's